All right, well, good morning, everyone. It's Friday morning, last trading day of the week. It's been interesting overnight. I was just getting caught up on the news this morning. I have been paying a lot of attention to Apple. Apple announced earnings yesterday afternoon. What's interesting about Apple, and I'm going to pull a chart up here, is the impact that the conference call had on the stock price in the overnight session. I think that the management team on the conference call did a good job of spinning it. Obviously not good enough because Apple got hit by some downgrades and some price target reductions early this morning. I was just reading up on that. There was a handful that raised their price targets. Really the only one that stood out was RBC. I think they raised Apple's price target to 200 from 220, something like that, but the rest of it was just downgrades. KeyBank came out with a downgrade. RBC boosted their price target, from 200 to 205, and a number of other things. If I were to pull up Amazon, I'm sure that Amazon has upgrades and price target increases. There you go right there. Morgan Stanley maintains their overweight on Amazon. They raised the price target to 1,500, which, it's pretty darn close right now. Here we go. Piper Jaffray's raising the price target to 1,650. That's pretty ambitious. Here we go. Monness Crespi Hart, haven't heard of that analyst, but they raised their price target to 2,000. So analysts are falling all over themselves to upgrade Amazon. They're not, it's kind of a mixed bag on Apple. Google, I haven't had a chance to take a look at, but I'm sure that, they've been hit by the same thing. I mean, their results were disappointing. They took a huge tax charge, which kind of caught everybody off guard, I think. Piper Jaffray is raising Google's Alphabet's price target to 1,350. I have a hard time calling it Alphabet. It's always going to be Google for me, but I know that's officially not the name of the company anymore. Morgan Stanley lowering a price target, etc., etc. So that's obviously having an impact on the NASDAQ futures. I mean, they went on a pretty wild ride last night. Let's pull up the NASDAQ futures here. Let's take a look at the big picture. If we put on a 15-minute time frame. So market close was here. This was the last 15 minutes of trading before the break at 5 o'clock Eastern. And then they resumed trading at 6 o'clock Eastern an hour later. And mostly it was a downside move. It's kind of on the rebound right now. If I want to look at my time frames, because I'm very interested in the stochastics, again, not a predictor of what the futures are going to do, but it gives you some clues. So basically, what I see right here as I look at the 1 minute, the 4 minute, the 15-minute time frame is pressure to the downside, momentum to the downside. If I look at the 1 hour time frame, the upward sloping stochastic histogram tells you a different story. I don't know. That is such a long time frame that it can almost be disregarded right now. It's going to take a lot to move that needle. If you look at the 4-hour time frame, which is just on the other side of that, we see downward pressure. So, that tells me that it's pretty much going to be a move to the downside today. If I look at the VIX, which is the volatility index, we're going to see a spike up, I'm sure. Looking at the 15-minute here. Yeah, from yesterday's close at 2 o'clock to about 3 o'clock in the morning, it was nothing but up. And then we see a little consolidation and now some correction. You know, that to me looks like just digesting moves up before it moves upward again. So I'm contemplating, if I take a look at my portfolio, I've got to protect myself. I protected myself yesterday on VWO, which that downdraft is going to continue. So I'm glad that I did, because that means that I'm protected from deterioration in the value of my long call, but also, since I sold premium, as the price of the underlying goes down, it's going to be cheaper for me to buy back that underlying. And once I sense that VWO has hit a bottom, which yesterday, you know, looking at the chart, I projected that bottom would either be 47.50 or 46. I went ahead and sold the 46s because for me there was no downside to doing that versus the 47.50s. The only downside would be I'm giving up more upside if I'm selling the lower strike call. If it reverses at 47.50, you know, that would not be as favorable, so I wouldn't be able to buy those back as cheaply as I would if they were 47.50s. But that to me was worth the risk. So I don't know what to do about Apple here. I mean, Apple's at 165. Basically, it's going to depend on what happens when the bell rings in about 7 minutes. If Apple's going to continue to move down and stay down, that my best bet is just to, well, actually, you know what? If I can sell it, although I don't know, because volatility is going to come out. And this is interesting because here it's showing volatility increased because these options were showing an implied volatility of 70 to 80. So we'll see what happens. You don't usually see volatility increase after an earnings announcement. I don't know, that may just be a temporary situation. I will probably put on a position in Amazon because I expect that momentum to continue. I learned my lessons from NVIDIA. NVIDIA, you know, I had that broken wing butterfly that I put on and got out and made a small profit. And if I had held on to it, I would have probably doubled my money, would have doubled my profits. So I will most likely put on something with Amazon. I don't think I'm going to touch Google yet. I think Google's a no touch for now. I think it still needs to find its bottom. It traded down to 1120 and then it traded up to 1150 last night, yesterday afternoon. And now it's trading down around, when I looked at it, it was 1130 or so. If I can type, it would be nice. And now Alphabet's trading it right at there, boom, right at 1130. So that looks like a bottom. I mean, at least from the standpoint of extended hours, what Google does in the first 5 minutes will be interesting. That will tell me whether it's going to continue going down or if it's going to head up for the day. Same thing, Apple. Right now it's trading at 165.23. Now remember, it closed yesterday at 167.78. It was 167 when I put the position on. Okay, so it's below that. It had traded up, as high as 174 and change. Yesterday, the management team, Tim Cook and his management team, spun their magic. And then the analysts came out, 174 and a quarter. Then the analysts had to come out and spoil the party. So, not good for Tim, who's has a position which profits if Apple goes up. So, other than that, just kind of getting ready for the open. I am basically expecting it to be a down day for the NASDAQ. I'm expecting it to be a down day really for all the major indices. I mean, if we look at the futures in the 3 minutes that we have left before the opening bell rings, VIX is up 6%. Mini Dow is down 0.9%. The NASDAQ 100, the mini NASDAQ 100, that's down 0.4. The S&P is down 0.2%, and the Russell is down 0.75%. So the only thing's up, gold's down, crude's down, the futures on the 10-year note is down. The only things up are VIX and the dollar index. So, not sure why the dollar index would be up. So first thing I want to do is be prepared to make a move on Apple. We're seeing some strength with the minute and a half or so that we have left before the opening bell, seeing strength in the NASDAQ futures, seeing strength here in Apple. That may be a tell of some sort. So really what I want to do is I want to add a 5-minute bar to this chart. So that I'm not doing guesswork on it. I'll still keep the 4-minute on my futures chart, but with respect to Apple, Google, Amazon, I'm really interested in seeing what they do in that first 5-minute bar. And we're counting down here. We've got 13 seconds till the open. NASDAQ futures showing some strength. Apple in the what's left of the pre-market is showing some strength, and the bell is ringing now. So that's a fake number. It's not going to be a real loss today. And see, if remember that we were looking at volatility earlier, this was up around 135. That wasn't a real number because the options don't trade until the opening bell rings. So that was just bids and asks that are ridiculously wide spreads probably. And that's messing around with the midpoint. And so that's giving you, fake numbers. Autodesk is down. I knew it would. I knew that the Nasdaq was going to take it down along with everybody else. VWO. Now that's showing up, and here's the reason why. VWO is down 40 cents. Okay, look at what that call did. Right. I don't trust this. There's no way that this call is up. Although I don't know if that's a result of a trade or not. That 30 cents, that may just be in the midpoint. That's why it's hard to tell sometimes. If I look at market depth, you know, 2190 and 2430, that's just the midpoint. Yeah, I mean, that's not a trade that actually occurred. I don't think. There's a way to tell. Once this needs to refresh. This is still showing the Nasdaq price scale. So here's your bids and your asks. Midpoint somewhere right here. All right, well, we're gonna have to look at time and sales then, which I don't know if that's not, if nothing happened or if it's just taking a while to refresh. I mean, it looks like trades happened. I do not know. I'm gonna have to talk to my broker about this. I do not understand why we're seeing such tremendous delays in the charting updating. First 4-minute bar is going to close in about 43 seconds, and right now it's looking like right now it's looking like it's going to be a down bar. Now what's interesting is the Nasdaq futures are doing okay. So on balance, I think that so if this stays below the low of the 5-minute bar, then I'm probably going to I would probably initiate a new short position to profit from this weakness. Same thing with Google. That's a pretty long shadow on that candle. Amazon, I think we know what we're going to see with Amazon. Yeah, look at that. So I think it's time to put on a trade with Amazon. I just want to see what the stochastics look like. 4-hour time frame. Obviously, we're seeing a crossover on the histogram. Which, that is still forming. But we see this down candle and then a gap up, okay? Which, I mean, it's barely a gap up. So you worry about it coming back to fill that gap? I don't. That gap is so insignificant that I don't even think that's a concern. So yeah, we're gonna it's time to do something. Out to expiration in February. Give myself a couple weeks. Where do I think Amazon's going to go? Let's figure it out. Pull the chart up. What I'm going to do here is draw a channel. You've got two channels. You've got this one here. And Amazon has broken out of that. So if we draw this secondary channel, it's bumping its head at the top of the channel. So if we take a look at realistically, where do we think Amazon's going to be at that expiration? It's probably going to be somewhere in the neighborhood of, it conceivably could be right here at about 1574. The reason why I say that is that's the midpoint of the channel. I mean, obviously, if it stays in this channel, it can be anywhere between the red line and the purple line. It could be as low as 1513 unless some outside force acts upon it and causes it to break up above or down below. But at expiration, we anticipate it could be somewhere between 1517 and this 1631. So I think the midpoint is, that's the spot I like to pick. So between basically 1572 and 15, about 1515. Okay. Amazon has come down. It was at 1498. It's at 1476. That's a good thing for us because that means that if we put on a call, which is what I think I'm going to do, I might buy a spread. I'm going to probably cap myself here at this 1550-ish level, or whatever that was. No, I forgot what I was going to do. Go back, Tim. Oh, I was going to add implied volatility. Yeah. Implied vol has come down considerably. It's at 33 right now. And looking at history, it's going to go down. It's going to go down, and it could go down to about this 20 level in the short term. It could overcorrect. It could bounce off of that. But I think bottom line is that volatility is continuing to go down. So what that would tell you is that the better bet actually is not to buy a call spread, but to sell a put spread, because volatility is going to continue to come out if this continues. So I'm going to add my trades, simulated trades. We're going to look at this expiration. Let's see all the strikes. $15.70, $15.50. $15.70, $15.50. Okay. So I'm going to collect a $41 credit, around, $42 credit for putting on this spread. My risk is $1,300. My reward is 42. Okay. So basically what this is telling me is at 1513 at expiration, it's a $1,300 loss. At 1570 or above, I've got a $4,300 gain. Now, looking at the chart, because there is a chance that it's going to be at this 1515, which is higher than where it is right now. Why would I want to lose money? I don't want to do that. So let's play around with this a little bit. So from a basic standpoint, I mean, we're looking at, max loss of 710, max gain of 1385. It's about 2 to 1. I wouldn't expect it to go down here. I mean, it could. It's amazing. It was 1384. It was as low as 1384 yesterday. And I think that that's looking like a support level. Short term, anyway. $13.85. That's about 2 to 1. Again, if it hugs the bottom of that channel and it closes the, at 15.10, at least I still make a small profit. I don't have to lose money for it going up in price. So it's at 14.55 now. So at expiration, my profit at 15.50 is 1,400. My loss, if it stays where it is now, actually I wanted 15.10. I don't know why it doesn't want to take that. That's a feature of the software, I think. At 15.10, then we make a small profit, 527. That's still good, still not bad. And then obviously we could risk, as much as 513. So Amazon has now broken below the first 5-minute bar. So that's telling me it's not time. Amazon's now retreating. So here's what we need to do. See if it stays within this channel. And that may not be just today, it may be, you know, what does it do Monday as well? Wind's down a little bit. It's down $3.88. The whole market's taking that down. Pretty sure that's what that is. You know, our VWO. I don't think that. Let's check in on Apple. It almost seems like this midpoint of the channel is going to be a level of support. It's hard to say. Alright, that's just taking too long to load. Yeah, this 165, this was a key level. It was resistance before, it's been support. It acted as support even recently. And now with earnings, it's violated that support level. And I think it's going to trade down to this 160. About 160. I don't want to see the position I already have on. I already know what's going to happen with that. And we'll continue to do so. So 160, 164. One 165. We're going to sell a call spread. That's about 1 to 1. It's not great. I don't think that this is a coin flip. I think that we are pretty clear that, what direction Apple is going to go. If it were to trade back up, I think around 170 would be danger zone. I mean, it traded as much as 174. Wait, what was this? 168. Oh, because it probably doesn't show me the pre-market. Extended hours, I want to make sure that those are being shown. Yeah, it was as high as 174. So, I mean, it could go that way. But really, I just don't see it, and that's just a gut feel. I mean, there's really nothing scientific about that notion at all. So if it goes up to 174, it would be a $185 loss. Though it would be, at expiration, it's a different story. I think 3 contracts, that's comfortable for me. Oh, I didn't look at the right. Yeah, that's a trade I'm comfortable putting on. And it could even go down to 150. Now, something I could do if I want to get real fancy is I could do like a multi-tiered. I could do a couple different spreads. I could have a trade. I could say, you know, put one that gives me max profit at 160, and another one that gives me max profit if it trades down to 150. I'll put the first one on, you know, right now. I'm not going to get crazy with it. Now, the good news is, well, I think it's good news. Our loss for the day has been cut by how poorly VWO is performing. It's down 88 cents on the day. That short call that I sold yesterday is what's interesting. Call me crazy, wasn't I looking at 33.10 here earlier? Anyway, what's interesting is this illustrates the use of options for risk management. Yesterday I decided I didn't want to close out on these 3 long calls. All right, I don't know. It's not sentimental value. I just filled my Apple trade. It's not sentimental value. I think that this downturn is going to be temporary, and then it's gonna hit that 160 level. Or sorry, it's gonna hit that 46 level because 47.50 was one stop. The next stop was 46. If it hits that 46 level, I'm gonna pay attention to it when it gets to 47.50 and see what I think it's doing. Which that reminds me, it would be a good idea to put an alert. because I want to be notified when it gets to here. When it gets to 47.50, I want to be notified. So I'll probably put 2 alerts in. So when it's at or below 47, we'll say 60, right? Give it an extra dime. I want to do a silent alert so that it alerts me again if it crosses back above and then it crosses below. Problem with having multiple sessions of my trading platform on is it can get confusing. That will get my attention. And then again at 46. So I should say 46.10. Should probably add a note on this one. This alert. Because what I want to do is I want to pay attention at that level. Because a lot of times what happens is you put, especially if you're managing a lot of positions or if you have a lot of alerts on, and I've had this happen to me, an alert will go off and I'll say to myself, okay, I remember putting this alert on, but I don't remember what I was supposed to do when the alert triggered. So now I have that note in there that's going to tell me, right? At 46.10, I'm not worried about it because basically if it hits that level, like, I'll put in, you know what? I'm going to follow my own advice. No, it's not close the position. Now, I've only got 2 weeks. This call, if VWO continues to go down by the 16th, which is 2 weeks from today, this will just expire worthless and I'm going to pocket the entire amount of premium that I collected, which was about $10.20. So $1,000. $1,020. That's what I thought. Okay. And actually, I'm going to edit this note here. Because if it bounces, okay. I'm going to be prepared to buy back my short call and let the long option ride up. Okay, so we're good to go. So really what I'm even for the day, and the reason why I say that is because this 140, that's not a real number. Like, I'm not going to lose, well, I don't know what the P&L and day, like, I'm not going to lose 372. I'm going to lose 260. My max loss on the position, let me twiddle my thumbs here while this reloads. That's a funky profit curve. It's showing the position I just put on, which is my bearish bet on what Apple's going to continue to do. I'm going to lose 268, when this expires at the end of the day, okay? So that's 110. So I'm really only down about $50 on the day, And really, what's helping me is that short call, which I'm glad I did that now on VWO. And honestly, Intel's saying it's down. Intel, my total loss on Intel is not going to be 112; it's going to be 70. So that's and now that's overreported by about $40. And that's what happens with options. Is they're just all over the place. Like, it's not just because that's the midpoint doesn't mean that's a real loss. You have to look at it. My Autodesk has been just a heartbreaker for me. It's swung back and forth multiple times from a profit to a loss. Now Wynn's done the same thing, but I kind of knew that going in. And honestly, what's dragging down Autodesk is because it's a tech stock. It's in the NASDAQ. Well, maybe is that true? I mean, let's take a look at the NASDAQ futures. Because we haven't looked at them in a piece here. Yeah, NASDAQ is down. Although that's about 60 points. 50 points, 50-ish. So that's what's pulling Autodesk down. What's interesting to see, I don't know if this is a rotation out of tech sector. One of the things that we've been seeing in the face of just this gradual melt up in the market indices is we've seen rotation out of one sector into another. So rotation out of tech into financial services, rotation out of financial services into energy stocks. We haven't seen broad-based selling. So what we want to look at now are the sectors. So the only sector in the S&P that isn't down today is consumer discretionary, which is really interesting because I think of staples as a defensive sector. I think of utilities as a defensive sector. Utilities is call it flat, is down 9/10, 9 basis points. Consumer staples are down, for consumer staples to be down 56 bips and for consumer discretionary to be up 51 bips, like that doesn't make any sense to me. Because you don't think of discretionary as a defensive sector. You think of it as a vulnerable sector because you always have to buy soap and shampoo and all those staples. I'm not saying that we're heading into a recession. It's just interesting with this rotation out of stocks and of equities in general that we would see positive inflows in discretionary. So what's our game plan for the remainder of the day on the NASDAQ? Yeah, we're going to play it to the downside. Turn my vibrate ringer off because that's just driving me crazy. Yeah, it's a play to the downside. So this would be, just looking at this time frame, this would be a good time to get short if this bar completes. It closes below that zero line, which right now just popped back up again. But here's the thing, is I'm seeing an opposite. The 4-minute chart is telling me the opposite story. It's showing strength from that perspective. So that's a factor. Like I've got, and really honestly what it is, it's the slow D. It's the full D. This hasn't completed its move up yet into overbought territory. So this isn't going to be a short for me until it's up there. So that's worth keeping an eye on. I'm going to take a small break. I'm going to take a 5-minute break. I'm going to leave the camera on. I'm just going to point up at the ceiling. I'm going to leave the stream going because I don't want to break this up into too many segments. I'm going to get myself together. I'm going to clean up some charts here, and I'll be back in about 5. All right, folks, I'm back. It was probably a little bit longer than 5 minutes, but I have my thoughts collected and I have my desktop back to being organized in a way that works for me. That's one thing about trading, is that there's logistics side of it that you just can't ignore. Economic indicators, economic data, as it comes out, is important to keep track of. I brought that up because the jobs number came out earlier today, and I didn't even really look at it other than kind of as a passing glance. But I do know that the indices are down today because it was not well received. And it wasn't like the numbers that were reported were bad numbers. That's not it. If you're trading stocks or options on stocks, I mean, every broker, every financial website has a news feed. I mean, that's a given. Not everybody has news about economic indicators. I have an app called My FX Book. It's really for Forex traders, but the information that's in there is helpful for a lot of what I do as well. Especially when you take a look, like I look at the futures, and sometimes I will trade options on ETFs that are tied to some of those futures, like not tied to it, but FXE, for example. That's the ticker for the Euro ETF, dollar denominated. So I'm going to want to stay abreast of what's going on in the European countries. ECB actions and inflation numbers and PMI numbers and PPI numbers as they come out in the various countries. I mean, some are more important than others. You know, Germany is the engine driving, the EU. So that would obviously be more important than something coming out of, maybe Switzerland or, just a smaller country. But what I was saying was non-farm, a lot of labor data came out today. Average hour earnings, average weekly hours, labor force participation rate. The really big ones are the non-farm payrolls and the unemployment rate. And the unemployment rate held steady. It's at 4.1%. That was the consensus. The consensus on the non-farm payrolls was 180. It came in at 200. So that would be better. That may be why the dollar was up, because that's bullish for the dollar when that number's up. But for whatever reason, the markets weren't. The markets may be sour just because the tech earnings that came out were kind of a mixed bag. And definitely that's affected the NASDAQ. Although the NASDAQ got, kind of hammered overnight, and it looks almost like it's been spending a lot of the morning just kind of recovering. If we look at this chart here, we see that NASDAQ is on, the NASDAQ futures anyway, are on this up tear. So what's happened here is, okay, yeah, we traded up. The slow D, the full D rather, is traded above that 20. Okay. This is continuing its upward trend. We're seeing a reversal here on the 15-minute chart. Now my opinion is it may make more sense to play this on the upside. When it comes to trading these futures, patience is important, because that's, I talked about this yesterday, that's how you get whipsawed. When you look at these stochastics and the histograms over multiple time frames, and you see that in your 1 minute, you're trending up, and in the 4-minute you're trending down. I know it's not in this picture, but just if it were. And in the 15-minute you're trending up, like every other one tells you a different story. First of all, you have to go with what the longer time frame is telling you. That's the prevailing trend. The other aspect to it, though, is when you've got that conflicting, like that's going to whip. You're just begging to get whipsawed. And that's no fun for anybody. So what I'm thinking I might do here is kind of pick my spot and go long mini NAS futures. Because I think it's going to trade up to about this 68.75 level. Right now we're at 68.60. That would be a 15-point move. That's, 60 ticks. That's about $300 if it does that. From the current level. Obviously, I don't want to get in now because this is topping. This is very toppy to me. And you can see it's starting to weaken. So if I were to get into a position now, it may go up a couple ticks or more, but it's going to go back against me, and then I'm going to be down here. Now that's not to say, like, if you want to build a position, if your trade size, ideal trade size is, let's say, 5 contracts, and you put on 1 contract at a time, and you've got your indicators, you might be adding contracts as you're sitting on a loss. You're not your thesis is still intact, like you still think it's going to go up, it's just in a minor correction. What you don't want to do is add the losers because your excuse is, oh, I'm just lowering my cost basis. That's another one of those recipes for disaster. You still have to believe, and you have to be honest with yourself. I mean, honesty is important, but self-honesty is the most important thing. If you believe that your thesis is still intact, then yes, you can add to it carefully, even if it's gone against you. But to add to it just because, oh, it's against me and now I have to make it up, I have to make up that loss, that's the wrong psychology, that's the wrong emotion, that's greed actually talking. Like, it's not avoidance of the fear of loss. Like, you've already incurred the loss, but you just don't want to take the loss. So what we can see here in the 1-minute chart, declining stochastic histogram, okay, a full K that's turned down is about to break below the 80. Calendar, the bar here rather, just broke below this 84-day, or is it 81-day moving average. So what it's trying to do right now is move down to here. Now when it does, that may be time to initiate a long position. But I also want to keep an eye on what it's doing over here. If this turns down, like this bar here is starting to weaken. On the 15-minute chart, we're seeing kind of confirmation of that crossover. This is potentially a whipsaw. So really this is the boring part of trading. I mean, it's patience, focus, discipline. I hate to tell you, but trading's not glamorous all the time. I mean, it sounds cool. So in a situation like today, where, okay, the Dow's down 279, that's a little over a percent. The NASDAQ 100 is down 0.75%. The composite's down 0.75%. The Russell's down over 1%. That's the big, from a percentage basis, that's the biggest loser today, at least among the indices. The S&P is down 85 bips. With a market that has been going up for so long and is in a correction, I'm sorry, I shouldn't say that. For a market that has been going up for so long, okay, and volatility being historically low, we're at an inflection point right now. And sometimes the only thing that you can do when you're at a potential inflection point is protect yourself. Whether that's being completely flat and effectively being flat the market or neutral the market and just liquidating everything, or putting on protection like selling calls like I did against that VWO long call option, or buying puts. If you can break even, you're doing okay. Now what we're seeing here, this is the S&P index. All right, we peaked at 2872.87. All right, gap down on Monday, down a little bit on Tuesday, Wednesday down, Thursday down. So we've got basically 3, maybe you might want to call it 4 consecutive down days. Is this a correction starting? Well, until I know, I don't necessarily want to place any bets. All right, this is interesting. see this channel here, which kind of started after this bottom? You know, this was the low on a weekly basis. This was the low back in early 2015. And you can see how it's been trading in this channel that's formed by this high, this bottom here on the lower bound, and this top here and this top here on the upper bound, and it's traded up through it. And is coming down. So the question is, if this upper bound of the channel was resistance before, is it support? And we don't know. I can't tell you what this is going to do. I can guess, but when I put real money on the line, I don't want to do that based on a guess. What I would need to see before I'm prepared to put a position on that's dependent upon which direction the S&P 500 goes, I want to see this break below and close below this upper bound here on a daily basis. So looking at the daily chart, we already know that we've closed below the low point of the highest bar. So we're making lower highs and lower lows now. So that would be a signal to short, but it would have been one that you took here, like around here, okay? We still can, but because you're so close to, there's a chance that it's going to bounce off of this and you're going to be wrong, right? And then you're going to have to take a loss. The thing is, if it breaks and stays below here, then it has all this room to travel down over the course of the next, I don't know, couple of weeks. So if you were to ask me, where's the S&P going to be at March expiration? I'd say around here. Like that is, for right now, that's my best guess. All right. Am I going to make a bet on it? Not yet. Not yet. I need to see how this is going to act, as whether or not this line here, this trend line, this upper channel, upper bound of the channel, is that going to act as support? Because if it does, then what's going to happen? Is this going to travel back up to 2872, look above, and fail again? It could. It could hug along. It could just bounce around here for a little while before it makes a decision. So before you put on a position and you're looking at something like this, it's not enough. You don't want to take a look. Okay, here's what I think it's going to do. Like, you don't want to do that. You know, you want to break it down in terms of here's what it could do. Okay, three options. It could break below, in which case we're going to see a downward move. It could bounce and go up again. It could bounce but just kind of hug along this line here, or it could even fall below and kind of stay here and bounce up but below it. I mean, on either side of that boundary, all of those things are possibilities. I mean, the only thing I can tell you about the market, like if you ask me what's the market going to do tomorrow, I'll tell you, well, I can tell you, I guarantee it's going to do one of three things. It's going to go up, it's going to go down, or it's not going to do anything. It's going to move sideways. Now, that seems like kind of a smart alecky answer, but it's true. Can I attach odds to those moves? Sometimes I can. Like, looking at just this, I can't tell you what the odds are of those three different scenarios. But if I were to look at the stochastics, if I were to look at moving averages, I might. And if I look at the stochastics, if this week closes about where it is now, then we're going to have a cross below the 0 point on this stochastic histogram. Okay, we've already seen it on the daily chart. And this is supposedly the same drawing. Oh, and the reason why that's important, like log scale versus just arithmetic scale, it can affect the way your drawings look. I prefer not to use log scale. I mean, sometimes I do. But when it comes to drawings, I'm more comfortable with straight arithmetic. So looking at stochastics tells me we're in for, this leads me to believe that, yeah, it's going to test that support and break below it. Let's talk about Bollinger Bands for a minute. Bollinger Bands acts kind of like a moving price channel. Like this one here is static. It's a trend line on either side, right? And then these lines here are Fibonacci ratios. Like that one's the 50. This is the 216, 382, 618, and so on. Let's look at the study. Sometimes it helps, like to understand a study and how it's calculated, to actually like go in there and fiddle with the variables in your study. Bollinger Bands. So it starts with a 27 MA. By default, it's going to be 20. I told you I like to do powers of 3, so 3, 9, 27, 81, and 243 are my moving averages. I use Wilder's because Wilder as a way of, there's simple exponential, Wilder, Hall, and another one. Wilder it's a slower moving average, so you tend to get whipsawed less than just a simple or even an exponential. I use a 27 Wilders for calculating the midpoint of the Bollinger Band, and then it's 2 standard deviations on either side of it. Okay. Now what happens is I like to watch the Bollinger Bands because when they narrow, that's a don't touch. Stay away from it because it's trading in a narrow band. When those bands start to widen, because the price action is almost like the price action is pushing it up or pulling it up the way this is drawn, that's a good buy point. When Bollinger Bands start to contract, which they're doing here, what that tells me is it's going to contract and they're going to settle somewhere. I mean, if I had to put a pin on the, put a dart on the board, like about here. Oops, that's not what I wanted to do. Somewhere maybe around here. And that's just pure speculation. But we think that there's a downward move in the cards. This 9 period MA here is turning down. The slope of the 27 is slowing. It's harder to tell on the 81 and it's harder to tell on the 243, but the slope on that 27 appears to be slowing. Okay, it's going to flatline here. This is going to come down, maybe bounce off of it, maybe break through it. It just depends, right? But the power of Bollinger Bands is that narrowing and that contracting. Okay, when you see it narrowing like you do here, okay, you know that you're in kind of a period of consolidation, right? And then if you look at your stochastic histogram, you see a crossover. And that is, we're off to the races. It's pushing that band up. That has been a solid move up. And you could have caught it here, right? All right, so what's the NASDAQ doing? Okay, so the NASDAQ has done what I thought it was going to do in the 1 minute time frame. The full D traded or moved up into this oversold territory, kind of floated around there for a while and crossed down, and is now headed towards the 20 threshold. Now here's the problem. Like I could, okay, so I could oh, it's time to go long, right? But I have this. I've got this 5 minute chart now, which isn't looking so strong. And when I commented on that about 30 minutes, half an hour ago or whatever it was, I think I said, I may have just thought it, waiting for this to go down. We also have to see what it's going to do here, because this is a close enough time frame that what happens here is going to affect it here. What happens here in the 1 minute is not going to affect the 1 hour as much, or the 4 hour for that matter. Not going to affect the 1 hour as much because it's so far removed. Like, I'm not going to expect to see that change much. Now, what we are seeing in the 15-minute is crossed down, couldn't stay down. Crossed up, not staying up. Now ready to cross back below again. Like, this is scary. And it shouldn't come as any surprise because the full K and the full D are really close to one another. So we're going to want to watch this here. What's going to happen here? If this pierces above that crossover occurring, the full K pierces above the full D, that's potentially a bullish signal. If it turns down and then starts to move away, if the full K turns down and starts to move away from the full D, which it just did, like I can't tell you if that's going to stay that way, but if it starts to move down, then that tells me momentum is accelerating to the downside. And quite honestly, I don't know what this is going to do. It's a crossover forming, all right? It's going to butt up against these two moving averages, the 9 and the 21, 27. If it closes above that, that may be a good set, maybe a good buy signal. Of course, by the time that happens, it may be too late. I'm not inclined to believe that because the full D has not crossed below the 20 yet. So I'm expecting a reversal here. Not to mention that we're looking bearish here on this 4-minute time frame. I mean, if anything, I think this is going to be a slow melt up because the full D in the 4-minute chart, it still wants to, playing motives to a mathematical indicator doesn't make any sense, but it helps me, right? Here's what I'm going to do. Once that breaks above 68.65, $68.64.75. Now I am going to use a trailing stop. Gosh, I want to make that tighter. Okay, we're in it now. It's thinking, and it just got out. For a small loss. This bar closes in about 15 seconds. If it can close above this line, that's a long signal. But it's not going to. That doesn't mean it's not going to go above it. It just means we don't really have a compelling. We don't really have a clue telling us that's what it's going to do. Definitely. I mean, this could conceivably be a look above and fail. Right now, it's looking like that because of what. Look at that new candle forming. Look what it's doing. So then the question is, what happens here? If it gets below the low of this bar, which is 68.44.75, that could be a short play. Not doing great on the day, but not doing bad either. I mean, it could be worse. So look at that. That was a look above and fail. And now we're seeing these time frames start to line up. Ignore the 1 hour for a second. The 1 minute is crossed over. The 4 minute is crossed over. The 15 minute is about to cross over. If it breaks below this level and stays there, it's a short down to 68.03. It's 9:18 and 10 seconds now. At 9:20 the bar closes. The candle closes. This was support. There's even support here from a closing perspective, and here. Like these bars closed above it. This was just a touch. Okay, so now it's traded below. This is enough to make me want to get short. And I just did something that you're not supposed to do. I got rid of my stop. I don't want to be stopped out too soon. I want to give this time to do its thing. Now what's interesting is that bar closed right on that line. But it's trading below still. It's trying to move below the low of this candle, which was at 68.41. Okay, so now the problem that we're having is it's rebounding from a 1 minute perspective. I'll show you in a second. Now that rebound is losing steam. The full K was trying to cross back above 20, but you've got this full D. It's almost like it's pushing, like it's holding it down, like it's exerting some kind of an opposite, gravitational force. Like full D is saying, "Nuh-uh, I still want to move down, so you're not going to move back up and cross me over." This can be the hardest part of trading is waiting to be proven right or wrong. See, right now, this is a struggle. Bulls and bears are fighting this out. For a while there, it was starting to look like the bulls were winning. But the bears they drew a line. The line in the sand is right here. And now the bears are pretty firmly in command. Which I think this 68.33 is a good exit point. I mean, the Bollinger Band too, but it's narrowing. What I was saying is it's narrowing, so I don't necessarily trust it. So the bears thought they had the bulls on the ropes. They don't. Bulls just got their second wind. See, and now what I think I have to be prepared to do is to get out at the bottom of this candle here. The low there is 68.37.75. You know, we're still making lower highs, lower lows. And now this may be an exit signal because this is not going well. Okay, so what's happening here? Full D is having its way. Full K is being stubborn. But you saw we just went from a open P&L of negative 105 to now we're down, now we're even, now we're flat. And that full D is going to pull that full K down with it. Okay, now it's time to get out because that's just too much. We're going to have to wait for a better spot. See, and that may have been, I may have gotten out too early. It just concerns me well, see, and that's what happens, right? You get a head fake. Nobody likes when it happens, but it happens. I certainly don't like when it happens to me. Nobody likes having the wool pulled over their eyes, boys and girls. But there's not much you can do about it because it's a balance between wanting to give the trade time to mature and do what you think it's going to do, and having that degree of self-honesty to where you can say to yourself, I think I'm wrong, I think I got into this too soon, and keeping your losses small. Like the only thing worse than, I've heard this, the only thing worse than being wrong is staying wrong. Staying wrong and taking bigger losses because you're stubborn. Hanging on to that hope of, oh, it's going to turn around on me. I can just tell it's trying so hard, and then it doesn't do it, and then it rips against you. It goes back, it goes all the way up here, and it rips your face off. And now I'm sitting on a $400 loss instead of a $75 loss. So here's the thing. There is going to be plenty of opportunity to go short. Because of this, because of this, because this full D hasn't, on the 1 hour chart, hasn't crossed below 20 yet. Yeah, would I have liked to have held on? I would have gotten out right here and it would have been a small profit. I would have loved to have done that. But the temptation I'm fighting right now is to try to get back in because I don't want to miss that move. That fear of missing out is a killer. If you can't master the emotions of fear and greed, you're done. That's why it's the logo for my channel. I'll show you in a second. I don't know if I can expand the photo. I'll show it to you after lunch. So I'm going to break for lunch. Here's what I can almost guarantee is going to happen over the lunch hour. I'll be keeping an eye on this. The full D is going to get its way. It's going to cross below this 20, and when it does, it's going to rebound back up to here. Once that does, then it's going to be a short. Because I don't see this changing. I see this continuing to follow the lead in the 1 minute chart, and likewise here. And likewise here. So this is where we're going to take a break. Enjoy your lunch hour if you choose to take it, and we'll see you at 1:30 Eastern Time. So I'll be in a little under 2 hours.